All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is May 1st, 2025. What happened to April? I thought it just got here. That's gone already. Bring on the sunshine and bring on the big tech earnings. Stocks are up this morning. At least they were up the last time I looked. They're starting to head a little bit lower. Not sure what happened there. But they're up this morning on Meta and Microsoft earnings. Both beat on the top and bottom lines. Look, they were fantastic earnings reports. And so they're dragging the whole market higher. So if you were looking for that pin to pop the AI bubble yesterday, did not happen. Period. Hard stop. End of story. But the more important thing, besides the earnings, which were really good, right? Meta's earnings up 16% year over year. The big thing was CapEx. That's what the market really was zeroing in on. What are their plans for investments in AI data centers? That is what this bubble hinges on. It's not about what their earnings per share was. It wasn't even about what their revenue was, although those are important. What is the CapEx telling us about will those glorious NVIDIA earnings reports continue? Well, with Meta, they surprised nobody. Meta increased their CapEx once again. Why am I not surprised by that? Well, consider the fact that Meta just lost more than $4 billion in their Reality Labs division. They lost $4 billion on $400 million in revenue. All right, so they're losing $10 for every dollar they bring in. Think about that for a minute. That's the metaverse. That's their augmented reality goggles. They're still spending billions of dollars on that crap. So, in my opinion, Meta will be the very last to stop in this game of CapEx chicken, which means Meta is going to drive face first into the wall. All right, they'll be last to blink. No big surprises there. Now, Microsoft, that's the one that was really important. Those Microsoft earnings, we really wanted to know about their CapEx, especially because of all the stories about canceled data centers. And look, there's been a lot of talk about that. And Jim Cramer's been saying, oh, fake news. We should sue anybody who reports on this stuff. Yeah, okay, Jim. Now, Microsoft also came in with a big beat on the top and bottom line. Azure, which is the business division that includes their cloud, that includes their data center rentals, 33% growth versus 31.4% expected. So that was a beat. Now, when it comes to Microsoft CapEx, that one is not so clear. All right, the AI bros are out there be like, oh, they said a thing on the conference call and therefore CapEx increases, AI bubble goes up forever, quadrillions of dollars, I'm going to buy a new house and a new car and a Lambo and everything else, all that stuff. Look at what they actually said. Look at what the actual numbers are. Maybe I'm making a bigger deal out of this than I should, but I'm not the only one who caught it. The New York Times caught it. Nobody's reporting on this. You got to actually peel that layer and look at what they're doing, what the math is saying, and then look at what the executives say on the conference calls and how they can, oh yeah, Obi-Wan Kenobi, from a certain point of view, this is true, but it's not. You're going to want to see that one. There's some big things hiding in Microsoft's CapEx there. Also, on the subject of NVIDIA, there was a story yesterday. I mentioned this in my Twitter feed. I think the world is really underestimating just what a colossal piece of shit Jensen Huang is. I really don't think we fully appreciate just how awful he is. I mean, I don't want to get censored for my language here, guys. I'm going to read you this headline, talk about this story from yesterday, and you really got to take a step back and view this thing big picture and be like, wow, this guy would literally sell his own mother if it would make him some money. He would. He's really awful. General Motors, meanwhile, they cut their guidance this morning, just 2 days after they pulled their prior guidance in their earnings report. Why? They finally got a little bit of clarity from the Trump administration on tariffs. Emphasis, a little bit of clarity. That story yesterday about how they weren't going to stack the steel and aluminum tariffs and the idea of partial reimbursements for 2 years on parts made in other countries for vehicles that are assembled here. So GM, it took them a few days. They were finally able to quantify the impact of that. Looks like it's going to cost them $5 billion. GM stock was actually up on that news. I think the market was pricing in a little bit more pessimism than that. McDonald's is out with earnings this morning. Big revenue miss, 3% drop in Q1 profit. Same store sales were down. Less foot traffic at McDonald's. Maybe we got the struggling consumer. Maybe once again the GLP-1s and the Ozempic effect. People eating less junk food. That's hurting McDonald's here. Also big news this morning. The U.S. has sealed the deal with the Ukraine for critical minerals. That's the deal that they were supposed to sign back in February when mistakes were made. I think we can all agree mistakes were made in February. The optics of that didn't really go over so well, certainly not with the rest of the Europeans. Anyway, they finally sealed that deal yesterday. It seems Trump and Zelensky had to sit down at the Pope's funeral, and they played nice in the sandbox. Nobody made any stupid speeches for the cameras. So they were finally able to get that deal done and signed yesterday. And basically, we are going to be selling them weapons now instead of just donating them weapons. We're going to actually sell them this stuff, but they're not going to pay us in money. They're going to pay us in IOU minerals. They're creating this new, they're calling it like the Ukraine Reconstruction Mineral Investment Fund, whatever you want to call it. They're putting their positive spin on it. We are going to give them weapons on credit. We're going to sell them to them. They owe us natural gas, oil, copper, aluminum, whatever they're going to dig out of the ground in Ukraine. So look, this changes the calculus in these peace talks because now the United States has a financial interest in Ukraine surviving as a country and not just ceasing to exist, right? Because then all this money that we're giving them or all the arms that we're giving them and the money they owe us goes away, counterparty risk. This also changes the calculus for Vladimir Putin, who has been unwilling to talk peace, or at least he's been kind of a stubborn a-hole at the peace table, which unusual for Vladimir Putin, right? Look, whatever happens here, the flow of U.S. arms to Ukraine has resumed. Let's see if that doesn't jar something loose at the negotiating table. Maybe Vlad is a little bit more willing to talk now that there's going to be more HIMARS and more javelins on the battlefield. Maybe the Ukrainians can actually salvage some amount of their territory. I mean, some of the demands that Vladimir Putin has been making have been just untenable from a Ukrainian perspective, basically taking half the country. So look, I don't know if this is going to make things worse or make things better, but at the very least, a deal is done. And so that chapter that began with that blow up in the Oval Office is now behind us. CVS stock this morning surging on an earnings beat and a guidance raise. CVS has been struggling with losses in their insurance division. It looks like that is finally behind them. We also got unemployment data this morning. Well, jobless data. We get the jobs number tomorrow, but the data we got today, it was rough. Initial claims higher, continuing claims a lot higher, breaking out from this band it's been in for several months. Not a good indicator because this is backward-looking data from a few weeks ago. Shows people are losing jobs, still can't find new ones when they do lose jobs. And now that we got this trade war going on, that sure as heck is not going to help the job situation. Any relief from potential reshoring of domestic manufacturing isn't going to show up for months at best, probably not years, which means we've got higher unemployment on the horizon here. And last but not least, something I got to talk about, there was a fake story in the press yesterday. Look, on this channel, I often make jokes about people familiar with the matter. And, I always talk about these guys. There's a reason why I do that. And that was front and center in this fake story that was going around yesterday, which is becoming increasingly common. Stick around to the end. We got to talk about that one. Why don't we shrink my big melon of a head in the meantime, and let's see what's going on in markets. Don't forget all that stuff for the algorithm, by the way. Hit that like button. If you're new here, hit that subscribe button. Come on back tomorrow. We do this every business morning. So come have your coffee with the melon heads as we go through markets. And right now, markets are still higher, but they've given up some of their gains in the last couple of minutes here. The S&P is up by 51 points, or about 0.93% higher. It was significantly higher than that earlier this morning. I don't think the market did not like that jobless data that came out around 8:30. Looking over at the Dow, it's still higher by 200 points, a 0.5% higher. At one point, it was up by, looks like it was up over 400 points, almost 500 points. So now we're down to just 200, giving up some of those earlier gains. And tech is leading the way here, of course, on the backs of that Microsoft and Meta earnings report, 305 points higher, 1.56% to the upside for NASDAQ. Meanwhile, we've got a slightly stronger dollar once again here, 99.84. We very briefly broke above that 100 threshold on the Dixie again. The dollar continues. I don't know if it's a dead cat bounce, whatever it is. The dollar has strengthened modestly from its lows, up a couple of points here, 20 basis points higher for the morning. Now, looking over at the bond market, we've got yields are largely lower. I do see the 30-year there creeping into positive territory, 4.682% for the 30-year Treasury. That's up a fraction of 1 point. The 10 years at 4.153, down 2 points and change this morning. The 2 years at 3.582, that's down almost 4 points. And the 1 month is at 4.299. Now, the interesting thing about this, these aren't very big moves. The middle of the yield curve, all right, 4 basis points, that's a decent sized move. But the interesting thing here is today I would classify as a risk on kind of day. You'll see in some of the other statistics we're about to go through, a lot of risk on behavior. Stocks higher, Bitcoin higher, gold lower. And yet we're seeing bonds higher here, right? Remember, yields going lower. That's bond prices going higher. I'm surprised to see bond prices going higher on a day that most would describe as risk on. So that's a little peculiar here. Maybe something going on in the bond market here. I don't know what to make of that. Let's look over at the commodities board here. Spot gold down $59.69. See also risk on. We have safe haven assets selling off here. That's down about 1.8% at $3,228. Spot silver is down as well, 16 cents lower, about 0.5% in the red at $32.45 this morning. We've got copper showing a little bit of signs of life here, up 0.75%, $4.64 for copper futures. Platinum is up about 0.2%. Palladium is up about 1.3%. And crude oil is down again here, 35 cents lower, about 0.58%, $57.88. Just a reminder, guys, we get another OPEC meeting on May 5th, and we are expecting the possibility of another big oil output increase from the Saudis. That's on Monday, so pay attention. The oil market could see some fireworks in the days ahead. By the way, look at this oil chart here. We were pretty low this morning. WTI crude dipped below $57 at one point at $56.48. We're back up to almost $58 here now. So a little bit of volatility in the oil market. But look, we've seen a substantial decline since Liberation Day, or I should say since March. Liberation Day was on the 2nd, and then the Saudis came out on the 3rd, and that was when that big decline happened. Look, guys, we are lower than we've been at any point since the Russian invasion of Ukraine in February of 2022. That was around here somewhere. So oil threatening to break down lower here. Also going on this morning, Bitcoin sharply higher here, the highs of the morning. I went looking, no specific news in Bitcoin. We're expecting some news in Bitcoin over the next few days because we're coming up on that 30-day or 60-day birthday, whatever it was, when the executive order that Trump issued and said, hey, I'm forming a committee to go explore the possibility of the strategic Bitcoin reserve. That report is due in the next couple of days here. Maybe somebody got advance notice or somebody got a copy of that report ahead of time. Let's be honest, that has been happening all over the place in the last couple of years, months, forever. So maybe somebody got wind of some good news before everybody else. I don't know what it is. But it's also a little bit of a risk on day. So Bitcoin is doing well here. $96,519 is priced on Coinbase. That's up by about $2,300 versus yesterday's prices. So Bitcoin continues to perform well here. Now, let's talk about the big stories this morning. Let's start with Meta. The big tech earnings, they were really good yesterday. Meta's strong ad sales dampened tariff-induced fears. Now, the ad sales, that's interesting, guys, because who buys ads on Meta? Pretty much small business, right? And also, you got a lot of ads for like Temu and Shine and all that garbage. I wonder just how safe are those Meta ad sales in the near future? Well, they dampen tariff-induced fears, so maybe they are safe. My gut tells me they're not. Meta Platforms rode strong advertising performance to beat analyst revenue estimates for the first quarter and match expectations for the next quarter on Wednesday, assuaging investor concerns over tariff-related economic fears. The Facebook and Instagram parent also increased planned capital expenditures this year as it speeds up construction of data centers that can support artificial intelligence, which it sees bolstering and transforming its business. That's big, guys. Meta boosted its 2025 CapEx plans to between $64 and $72 billion. CEO Mark Zuckerberg previously said the company could spend as much as $65 billion this year. So they are drastically raising the higher end of their CapEx range, while the lower end is still just barely within their prior guidance. But anyway you look at it, this is a CapEx increase. Again, not a big surprise here. I've always said Meta will be last to blink in the great game of CapEx chicken because they're still spending billions of dollars on the metaverse. All right. So, all those people who are buying real estate in the metaverse and they were hosting virtual parties and everything and like, oh, you want to come hang out in my metaverse hot tub? Creepy AF. Yeah. How's that investment going? Is that even still a thing? Does the metaverse even work still? They're still spending money on it, I guess. $4 billion on a $4 billion loss on $400 million in revenue. All right, ride that rocket, Meta. Look, Meta stock, though, that ad revenue beat. Meta stock's up 7.4% here, $589.75. Guys, there's a $1.3 trillion company adding 7%. That's a lot of market cap that is materializing here, up $41. Now, in my opinion, the more important one was Microsoft. And similar story. Microsoft shares jumped 9% on earnings and revenue beat, an uplifting forecast. It was a pretty good one for Microsoft. The shares rose about 9% in extended trading on Wednesday after the company reported better than expected quarterly results driven by its Azure cloud business and issued surprisingly strong guidance. Remember, guys, it's Azure cloud business. That's where its data centers are. And remember, Microsoft bought a huge chunk of OpenAI, and OpenAI got data center credits instead of cash. And then when OpenAI redeems those data center credits, Microsoft reports it as revenue. So this big surge in their cloud business, that's Microsoft just redeeming their coupons with OpenAI. It's not actually a lot of money changing hands there. Microsoft called for revenue in the range of $73.15 billion to $74.25. The middle of the range was higher than prior consensus. The company sees 34 to 35% in Azure growth at constant currency compared with the street's consensus of 31.5. So it's that cloud growth. That's what the market zeroed in on. Now here, management reiterated the capital expenditures will grow in the new fiscal year, though at a slower rate than the current 2025 fiscal year. The company implied operating margin of 43.35 was just shy of consensus. But I want to zero in on this statement here, which the stupid thing covers up. Management reiterated that CapEx will grow in the new fiscal year, though at a slower rate than the current 2025 fiscal year. First things first, the current 2025 fiscal year ends in June, next month. So the money that their CapEx 2025 that they keep reiterating, that's money they've already spent almost entirely. So that's a worthless number. They also didn't give us a number on what their 2026 CapEx is going to be. All they're saying is it will grow in the new fiscal year. Well, that's overlooking something because check this chart out. This is, by the way, shout out to Special Situations newsletter that posted this one this morning. Microsoft's CapEx. Now they're saying it will continue to grow. Look at this chart that they're showing on this Bloomberg report. Does that look like a chart that is growing? Well, yes, obviously you've got this big trend up, right? Higher several years in a row. But notice that most recent data point, the CapEx that Microsoft just announced, that $21.4 billion, that is lower than the prior quarter. Now, it was higher than the same quarter a year ago, $14 billion in the third quarter of 2023 or 2024, and then $21.4 billion in the third quarter of 2025. So what does Microsoft do? Microsoft reports a 50% increase in our CapEx. Okay, that's true from a certain point of view, Obi-Wan Kenobi, versus a year ago, it is up 50%. But it's also lower than it was last quarter. So is Microsoft still increasing their CapEx? Depends how you look at it. From a year ago, yes, they are. But that most recent number, sure as heck, is lower than the one before that. And Microsoft is saying we will continue to grow our CapEx. Well, that could mean we're going to keep shrinking our CapEx while maintaining the number above what it was a year ago at the same time. And since they didn't give us an actual number on what their CapEx actually is going to be, we don't know if it's going to grow or not. Nobody's talking about this except the New York Times of all people. The New York Times says Microsoft moderates AI spending as profit increases 18%. You do not find this anywhere in the financial press. Since the release of ChatGPT chatbot in 2022, Microsoft has plowed more and more money into building data centers in what one industry analyst called the largest infrastructure build-out that humanity has ever seen. Hypey talking points for 1,000, Alex. But after 10 consecutive quarters of increased spending for artificial intelligence, the company has tapped the brakes. according to financial results released on Wednesday. In the first 3 months of 2025, Microsoft spent $21.4 billion on CapEx. That is down more than $1 billion from the previous quarter. The company indicated it was on pace to spend more than the $85 billion on CapEx in the current fiscal year, which ends in June. But the pullback, though slight, is an indication that the tech industry's appetite for spending on AI is not limitless. So let me know in the comments what you think, guys. Did Microsoft cut their CapEx or did they raise their CapEx? Parse the language. They said, oh, we're going to continue to grow our CapEx, as if to say the CapEx has been growing the whole time, although down sequentially. Maybe I'm making a bigger deal out of this ever slight little dip. Oh, $1.2 billion decline in CapEx. Maybe I'm making a bigger deal out of that. Maybe it's confirmation bias. I'll be the first to admit I am biased against the AI bubble. I think it's all smoke and mirrors. I think it's going to blow up in their faces. I'm curious what you guys think about that one. But Microsoft stock is ripping on this news. $429.40, up $34, 8.5% higher. It was almost 10% higher at one point this morning. Guys, there's a $2.9, almost $3 trillion company. A lot of market cap is materializing out of thin air here. Now, I got to talk about this story because, oh man, did this piss me off yesterday. I took a screenshot of it. NVIDIA CEO Jensen Huang warns China is not behind in AI. I'm not going to get into the whole story here. But look, Jensen Huang has been selling chips to China, whether directly or not, whether he's pretending he's playing stupid, he's acting like, well, we tell our customers they have to follow the law. I did a whole video about warehouses loaded with NVIDIA GPUs and Supermicro servers. In that video, I showed you how Facebook Marketplace, Alibaba, eBay, you can buy H100s shipping from China. I showed you videos of Chinese buyers holding up H100s saying, this is my illegal H100 GPU from NVIDIA. All right. I mean, it is so obvious that this is going on. Jensen Huang has been selling AI to China, selling his chips to China. And now this AI diffusion rule is about to come out, and he's lobbying the president to change the rules, saying, oh, China is just behind us in AI. They're not far behind. They're not even behind at all, because I've been selling my chips to China all along. And so you need to let me keep selling my chips to China in order to keep China from catching up to us? What? Jensen Huang is claiming that these AI diffusion rules are going to slow down American companies' development, and therefore the only way to maintain our edge over China is to let him sell his chips to China, which he's doing anyway. By the way, AI, although I'm very critical of AI and its usefulness, at least in a commercial sense right now, there are obviously incredible military applications for AI. That's why the Chinese really want it. And so these chips that he's illegally selling to China could potentially be used to fire missiles at our own freaking aircraft carrier. This is an American company. Jensen Huang is an American CEO, an American citizen of Taiwanese descent. This guy's family comes from freaking Taiwan. And now he pretends to be an arms dealer, selling weapons to both sides in a conflict, getting rich no matter what. Again, Jensen Huang is a colossal piece of shit. Just an awful human being, the worst of the worst. I saw this story yesterday. I could not believe what I was hearing. But there it is. Again, do not underestimate what a total sleazebag this guy is. All right. Let's change gears real fast here. General Motors lowers guidance as Trump tariffs will cost up to $5 billion. We're starting to get some quantities attached to the trade war hysterics, if you will. General Motors lowered its full-year profit outlook just 2 days after suspending earnings guidance, citing exposure to as much as $5 billion in auto tariffs being levied by President Trump. The company said it now expects earnings before interest and taxes to fall into a range of about $10 to $12.5 billion, down from its initial guidance in January for as much as $15.7 billion. The reason, according to the letter to shareholders, is the company's exposure to tariffs. I believe I had a quote here. The company also moved to preserve cash by holding off on $4 billion in planned share buybacks. During the quarter, GM cut capital spending in the quarter by $900 million to $1.8 billion. GM shares were down as much as 4% since it announced first quarter profits. That was 2 days ago. And it looks like it's getting most of that back here, up 3.3% on this news. It looks like the market was pricing in a little bit more negativity surrounding those tariffs, and then the $5 billion number, not as bad as they feared. And so GM is rallying this morning, $46.74, up by $1.50. We also got earnings from McDonald's this morning, and they were not good. McDonald's sees lower foot traffic as revenue misses Wall Street expectation. Fast food giant says consumers continue to grapple with uncertainty. In other words, you can't even afford McDonald's anymore, but we'll call that uncertainty, sure. McDonald's stock fell 1.8% in pre-market trading Thursday after it reported a 3% drop in first quarter profit on lower than expected same-store sales as guest traffic to its restaurants dipped. McDonald's said its first quarter same-store sales across the U.S. and international network fell 1%, while analysts had expected a rise of 0.5%, according to FactSet data. Chief Executive Chris Kempczynski, CEO Chris, said that consumers today are grappling with uncertainty, but the fast food giant has confidence that it can navigate even the toughest of market conditions and gain market share. McDonald's said its first quarter comparable sales dropped 3.6% in the U.S. due to negative comparable guest counts. That's pretty terrible, a 3% drop in same-store sales. Their first quarter profit fell by $1.87 billion to $2.60 a share from $1.93 billion or $2.66 a share in the year ago quarter. So McDonald's not doing so good here, down 2% ahead of the opening bell, trading $313.11. All right, let's talk about the mineral deal. The U.S. and Ukraine signed resource deal after tense negotiations. It seems they were able to keep their mouths shut long enough to get the dotted line signed. Thank God. That only took a couple of extra months after that blow up in the Oval Office. Nobody talking about who's holding how many cards for a change. The U.S. and Ukraine reached a deal over access to the country's natural resources, offering a measure of assurance to officials in Kyiv who had feared that President Trump would pull back his support in peace talks with Russia. The deal will grant the U.S. privileged access to new investment projects to develop Ukraine's natural resources, including aluminum, graphite, oil, and natural gas. It's been seen as critical to fostering Trump's goodwill as his administration pushes to end the war that began when Russia mounted its full-scale invasion more than 3 years ago. This agreement signals clearly to Russia that the Trump administration is committed to a peace process centered on a free, sovereign, and prosperous Ukraine over the long term, Treasury Secretary Scott Bessent said in a statement. And to be clear, no state or person who financed or supplied the Russian war machine will be allowed to benefit from the reconstruction of Ukraine. So, look, guys, this just means the weapons are going to flow again. And you can see it already from Terror Alarm on Twitter. Trump lifts arms embargo on Ukraine and approves the first shipment to Kyiv worth $50 million. So the weapons are already heading back over there. The difference is they're paying for them now. Now, they're paying for it on credit. They're saying we will pay you with a mineral to be named later. So the U.S. now has a financial interest in Ukraine surviving this war. People are saying, oh, we're taking their minerals. We're taking their minerals. No, we're selling them weapons. We're not taking anything. The difference is we're no longer giving you weapons. You're paying for it now. Look, the ideal situation here is that this forces a peace deal. All right. Now, Vladimir Putin in his calculus has to understand the weapons from the West are flowing back into Ukraine now. The U.S. is selling them stuff. The Europeans are gearing up big time to double down, especially since that February blow up in the Oval Office. Maybe now is a good time to cut a deal. Maybe now's a good time to stop this stupid slaughter over inches of real estate. I just throw it out there. You guys do what you want with them. Meanwhile, CVS beats earnings and expectations and hikes guidance, and the stock is surging. CVS is having a great morning here. We'll skip a little bit of this and go right to the big thing. The medical loss ratio, a key metric that tracks the proportion of premiums paid out to cover medical expenses, came in at 87.3 compared with expectations of 88.3. That lower number indicates higher profitability. So CVS has been kind of taking it on the chin financially for the last year or two because a lot of people put off medical procedures after COVID. They didn't want to go to the hospital and get sick. Now they're all having those procedures done, which was a big drain on the resources from CVS because they have to pay for it. And so now that is starting to wane a little bit. It looks like that has run its course, getting maybe a little bit back toward normal. And so CVS reported better than expected earnings. And look at CVS stock this morning. It is ripping here. Let's refresh this. The opening bell has rung. Okay, it's actually given up a lot of it. CVS stock was up almost 9% at one point. But look at this. The opening bell just rang, and it's taken a dive. I'm not sure what to make out of that. What happened at the opening bell? Was it CVS specific, or are the indexes doing that? I don't know. Keep an eye on that one. All right, one more thing I want to talk about, or two more things we got to talk about. Initial and continuing jobless claims. Not good, guys. Big bump in initial jobless claims. 241,000 people, up from 223,000 in the prior week. Now, the initial jobless claims had been pretty low for a while here. This spike, it's in line with some of the prior spikes that we saw, so it's not too alarming. But I don't expect this to really get any better with the trade war lingering here. And it's not just the initial claims, this big miss on initial claims. Look at continuing claims in the United States. Whoa, big jump here to 1,920,000. All right, that's up from 1,830,000 in the prior week. Big jump in continuing claims, and this spike is higher than the previous spikes that we've been seeing. So we're finally out of this band. This does not bode well for the jobless claims, the non-farm payrolls that we're going to get tomorrow. This does not bode well for the trade war. People who lost their jobs recently are going to have a hell of a time finding a new job, especially as companies don't know what to expect with the tariffs. So the strong labor market, the myth of the strong labor market, continues to unwind in real time here. And last but not least, we got to talk about this one, guys. Tesla chair denies plans to look for new CEO to replace Musk. I'm not going to read too much into this one, but look, I often joke in this channel about people familiar with the matter, about anonymously sourced articles. They're becoming way too common. This is a decline in journalistic standards and ethics. Way too many people are reporting anonymous stories. And more often than not, how many times have we seen these fake stories based on anonymous sources? All right. And there was one yesterday, late yesterday, the Wall Street Journal reported that Tesla was looking for a replacement CEO for Elon Musk. It was a fake story. The board came out and said, this is absolutely fake news. Elon said it was fake news. And look, anybody who's paying attention to Tesla and understands the company Tesla knows this is a fake story, because Tesla's board of directors would never do that. Even though Elon Musk has been a liability for Tesla for the last few months because of his politics, I don't think anybody would debate that. But look at the multiples that Tesla trades at. And the only reason Tesla trades at multiples like that is because of Elon Musk. So even if Tesla stock were to be cut in half, which it nearly did, it's still worth it to keep Elon Musk as CEO, because with anybody else at the helm, that company would drop 95% and be valued based on multiples of sales, just like any other car company. And in which case, Tesla stock would drop at least 90% if that were to happen. So no, the Tesla board would never even contemplate replacing Elon Musk, no matter how bad his politics got, because it would be the end of their company. This story never passed the sniff test to begin with. I'm really surprised Wall Street Journal ran with it. And there's way too many companies that are out there talking about this one guy who seems to know everything. This person familiar with the matter. This guy's everywhere. He really gets around. And so that's why I often complain about anonymously sourced articles, because they make a mess. And I think people are just out there just leaking garbage to the press that they want to see printed because of their own stupid agendas. And the press is more than happy to print it, especially when it suits their narrative. And I just want to say, thank you very much to Viv B for supporting the channel. Thank you so much, Viv, for everything you do. She says, even my puppies are trying to work around the tariffs by digging a hole to China in the backyard yesterday. Well, progress is slow, but they appear to be in it for the long haul. I think I've got some foxes in my backyard that are making similar protectionist measures. I got a fox that seems intent on digging a den right next to my chicken coop. You're not getting through my Fort Knox security on that coop. I'm telling you, I got that stuff on lockdown. Won't be eating my ladies. But yeah, look, tariffs. By the way, guys, later today on the subject of tariffs, I have Craig Fuller, the CEO of FreightWaves, is coming on the channel to talk this afternoon. I hope to have that one posted later tonight. Really looking forward to what Craig has to say about what the logistics world is seeing is heading our way or maybe I should say lack of what the logistics world is seeing heading our way. Look for that one later today. Thank you so much, Viv, for supporting the channel. Good luck on your excavations, Viv's puppies. And also thank you, Viv, for gifting 5 Nobody Special Finance memberships. Thank you so much for doing that, Viv. That was very nice of you. Guys, if you got one of those memberships, be sure and say thank you to Viv. And welcome to the Melonheads. Feel free to use your free super chat, and I will read your questions and respond live on the air. Eduardo Garcia says gold to silver ratio formed a bear flag. You know, I haven't looked at the GSR in a couple of days, but I'm not surprised based on what we've seen, right? That thing went vertical after the tariff announcement. And so, yeah, forming a bear flag, trading a little sideways, maybe with a downward slant. It was still over 100 the last I looked. I don't have it in front of me right now, but I would imagine gold has had a rough couple of days. It's starting to come relatively back down to earth. Silver's coming along with it, but the gold sell-off has been a little bit worse. So I'm not surprised to see that bear flag forming. We'll keep an eye on that, guys. I do think the market is getting a little ahead of itself with the optimism right now. I think the market is pricing in Trump's complete and total surrender in the trade war. And have you guys seen Donald Trump's business history? Complete and total surrender. Not really his MO. All right. His personality flaws are legion, right? Obviously, the guy has a checkered past, to say the least. But absolute surrender, not really in the dude's vocabulary. So I think the market is getting a little bit ahead of itself. The GSR, if the tariff hysteria were to come back, I think that GSR would head higher in that situation. Thank you, Eduardo, for supporting the channel and for pointing that out. I'll take a look at that chart. Angel's Paradox. You know, I'm not familiar with Angel's Paradox, Pigo's trading desk. Let's see. Let me do a real quick search there. I don't know too much about it. Sir Norman Angell, is it Angel's Paradox? Wrote in The Great Illusion in 1909, believed that wealth in a modern world would be founded upon credit and commercial contract. If these contracts are abused, it is ultimately the abuser's debt-based status quo that is jeopardized. Wow. You're kind of talking a little bit about our fiat system, aren't we there? Was it Angel or Angel? I don't know. We'll say Angel's Paradox. Talking about counterparty risk in a debt-based system. And, you know, look, we're kind of like heading in this debt jubilee direction where we don't have to pay our mortgages because of this FHA program. We don't have to pay our student loans because of forgiveness. We don't have to pay this. We don't have to pay this. Let's default on our debt. Understand, guys, all of your money in the bank is somebody else's debt. Almost every dollar in existence is an IOU. Not quite every dollar, but most dollars in existence are an IOU. And so, yeah, Angel's Paradox is that is a real risk. I've never heard of that one before, Pigo, but that is a great historical reference. Possibly some light reading on the horizon. Thank you, sir, for supporting the channel. And Pandemonium Paladin says, love seeing the passion against garbage businesses. Look, NVIDIA, I don't know that it's a garbage business. They make awesome technology. I mean, the computing power, I use an NVIDIA GPU. I have an RTX 30, what is it, the 3500 or 3900, two generations ago, the top of the line one on my computer. So, I mean, it's not that the technology is garbage. It's just that the leadership, they are just so awful. They're just terrible people. They're liars, they're crooks, they're frauds, and now treasonous assholes. Let's just put it out there. I'm sorry, I know some of you guys don't like it when I cuss, but Jensen Huang is selling artificial intelligence chips, which could be viewed as weapons because of the military implications, to the Chinese, and then going to the United States and saying, look, the Chinese have this weapon, you better buy more from us. And this is from an American citizen of Taiwanese descent. Good God. Good freaking Lord. What an unbelievable scumbag. I cannot wait to see Jensen Huang in handcuffs. Let's see how many boobs you can sign with your hands tied behind your back. A-hole. Jack, take a deep breath. Thank you, Pandemonium Paladin, for getting me all fired up again. I finally got my blood pressure back down to a more manageable level, and then you got to go spin me up again. Thank you for supporting the channel, for being a melonhead for 5 months. Pig goes back and says gold swap lines will be relevant soon. Q Yellen. Gold swap lines. I think the revaluation is more likely, to be honest with you. And I think Janet Yellen's over there saying, well, I don't know so much about the swap lines, But I look at that gold revaluation as a way to just print money out of thin air and deposit it right into the Treasury General account. And I think, wow, why didn't I think of that when I was Treasury Secretary and I did every other sleazy tactic known to man except for that? Secretary Besson, I kind of admire the money printing prowess of the gold revaluation. Well, thank you very much, Secretary Yellen. I agree. The revaluation of gold, I think a lot of gold bugs probably are initially very optimistic about that. And they're like, yeah, higher gold. And then they realize it just means more money printing. Oh, maybe not so much in favor of that. Although ultimately that does mean higher gold if you're going to print more money. Gold swap lines, that's a little interesting. I'd have to really marinate on that and think about what that means and how that might play out. But thank you again, Pigo, for supporting the channel, sir. You keep queuing up my Janet. Dat Guy Joe Daddy. Thank you, Dat Guy Joe Daddy. Joe, can I call you Joe Daddy? He says, I don't get the hate for Meta because they are spending on new projects when critical of all the buybacks that other companies are doing. Okay, that's fair game. Look, the thing on Meta, I mean, I hate Meta because of what they do to young girls. All right. The things that we have learned about things that those executives say in FOIA emails, all right, maybe doesn't rise to Jensen Huang levels of dirtbaggery, but it's up there. All right. These guys prey upon insecurities up to including like people, they program their algorithm. We learned this in testimony recently. They program their algorithm to look for people who posted baby photos and then women who deleted selfies and then send them ads for things like cosmetic surgery and makeup, right? Like figuring out ways to directly monetize a young mother's insecurity about her appearance. It's just the way they manipulate the hell out of people for their own gain. It just rubs me the wrong way. That's why I hate Meta. Now, on the CapEx thing, Meta shareholders are willing to tolerate any amount of cash burn. The fact that they're still burning billions of dollars on the metaverse is laughable. The metaverse is a failed experiment, and they're burning billions of dollars of their investors' money. If you're a Meta shareholder, which I'm not, but if you're a Meta shareholder, Mark Zuckerberg is burning your money because he's too proud to admit this stupid project that he changed the whole brand of the company around is a failure. And therefore, his ego is taking priority over your shareholder value. As a Meta shareholder, that should piss you off. That's one of the reasons I dislike Meta. I hate them because of what they do to young girls. Now, the criticism of buybacks, that's legitimate, especially among other big tech companies, right? If you're buying back stock while at the same time your executives are selling stock, or while you're doing large amounts of share-based compensation or stock-based compensation, yes, that is also somewhat sleazy, although you could say it's just good accounting, because then what you're doing is, you're using your shareholders' money, your earnings, to buy shares and then giving them to your employees so that they can sell them instead of paying regular payroll like everybody else. Now, there is some favorable tax treatment around there. So I think stock-based compensation combined with the tax code is one of the reasons why we see so many share buybacks from big tech. Maybe Facebook does less of that than the other ones do. I haven't really compared that. That's a legit criticism for the other big techs. But really, the reason I dislike Meta so much, besides their burning of money without care for what they're doing to their own shareholders, it's what they do to young girls that really pisses me off. Thank you, though, Dat Guy Joe Daddy. Thank you, Joe, for supporting the channel. Appreciate that. Pigo's Trading Desk is back again. Says, look at his mention on sanctions. All right, I'm going to have to go look at. Is it Angel? I don't know. Mr. A, I'll go look on what he said about sanctions. Not going to do the DD on that in real time here on live, but thank you, Pigo, for supporting the channel, sir. And guys, thank you for having your coffee with the Melon Heads once again this morning. So it's a choppy day out there. Not sure what we're going to have. Thank you so much for the super chats and the support of the channel. You guys rock. Thank you also, everybody, for all my magnanimous Melon Heads on YouTube and Patreon. You guys rock. I got links down below, all that good stuff. Don't forget the like button and the subscribe button on the way out, should you feel so inclined. Oh, my God, I missed a whole bunch. Wait, stop the music. Stop the music. I started my sign-off already. Oh, my God, I'm the worst. Where did this come from? Okay. DG has dropped over 4%. What is DG? What are we talking about with DG stock? Is that Dollar General? Yep, DG, Dollar General. Okay, I'm not surprised. Thank you, Eduardo. Guys, I'm sorry. I almost missed a whole bunch of super chats. Yeah, Dollar General dropped 4%. Look, dollar stores are particularly vulnerable to tariffs, right? The cheap Chinese plastic crap, the dollar store stuff, that's going to really hurt them. Inflation already hurt the dollar stores. This is going to hurt them even more. Thank you, Eduardo, for sending the super chat. I got a text from Miss. She says, missed several. Yes, thank you, Miss. I appreciate that. Oh, we're going to have to do 2 sign-offs today. Viv B is back. Says, New York Times article exposed Meta AI allowing pedo-type conversations with underage users to actual investigative journalism. I know, I'm shocked. Thank God for that. Look, that's gross. All right, that's just freaking disgusting. Even YouTube had a big problem with that a few years ago. Now they cracked down on it. Hopefully Meta does the same thing. Look, guys, the dirtbags of the world are always one step ahead of the people who are trying to stop the dirtbags. And so as they evolve, we need to evolve. And hopefully Meta is very quick to crack down on this. I hadn't seen that New York Times article. I don't know when that came out, but that's worth looking into. Thank you, Viv B, for supporting the channel. Citrus Squeeze, been a melonhead for 10 months. Thank you, Citrus Squeeze. Orange Man, good. See, look at that. Jack, you were vindicated yesterday on the IR call with Microsoft, slowing growth in CapEx. All right. Vindicated. I'd love to be vindicated. All right. I'm always aware of my own biases, though. I'm not sure that's total vindication. It does seem like a step in that direction. Comments about demand changing data center placement next quarter will be more direct. I agree. I do think when Microsoft openly admits that we're cutting our CapEx, I think all of the AI stocks take a big dive when that happens. And if you're Microsoft, you're not going to say that until you absolutely have to, until you're like worried about legal consequences if you don't say it. And so you for now, you still have to peel back the layers to figure out what they're actually saying there. But I agree. Next quarter, we'll find out, is this a trend? Do we get another sequential decline in CapEx next quarter? If that's the case, then yes, now you got a trend. Thank you, Citrus Squeeze, for supporting the channel. The never-ending bubble story, Zuck, is a lame copy of a robber baron. Look, I don't like Mark Zuckerberg. I mean, he says whatever he's got to say. Look, all this stuff about like censorship and everything, and then he goes to Congress and he's like, oh, we take this so seriously and we're committing to all these different projects and initiatives to make sure that doesn't happen. And then they turn around and they do it even worse a few months later. I agree. A lame copy of a robber baron. They're modern day robber barons. Have they added value? I don't know. Advertising. I mean, it's effective advertising. Spending your money with Meta to promote your business is very effective because of the way they sell your data and manipulate people. But again, what they do to girls, the stuff with the pedos, I didn't even know about that story. That's a whole other angle. And again, I think they are burning their shareholders' capital just to stroke Mark Zuckerberg's ego. And any number of those reasons is a reason to dislike the company. Thank you, never-ending bubble story. Appreciate that very much. Okay, now is it safe to sign off? Is it safe? I don't know. I was premature with that today. Happens to a lot of guys. Oh, thank you, everybody, for supporting the channel. I appreciate that very much. Thank you to my mods for everything you guys do to the channel. Mish, Nan, M and J, you guys rock. I appreciate that so much. Also, you, my magnanimous melonheads on Patreon and YouTube. Links down below should you feel so inclined. Once again, the like button and the subscribe button. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.